Hello everyone, this is Riya Singh, the currency research analyst for Nirmal Bank. So let's look at the events that have happened in the Forex market. Now, recently Fed came out with his monetary policy and it did a rate hike of 25 bips, taking the Fed rate to 0.50. Now, if you look at the speech that was followed by the event, Fed governor has said that it will be more aggressive on its approach with respect to the monetary policy in the coming days. So it can be stated that Fed has moved to a more hawkish tone, and the same should be expected in the upcoming policy meet. If you look at the statements, the Fed Governor Powell has indicated that it will be signaling around 6 rate hikes, with putting the scenario on the table of 0.50 bips if the inflation situation worsen even more. Because if you look at the inflation parameter in the US altogether, it has risen to 7.9% on the monthly basis in the Feb itself, and is considered to be accelerated more when the March numbers come into the picture. So in order to tackle the inflation, more aggressive tone could be anticipated from the Fed. Now, how it will impact the dollar and the Indian currency. Now, whenever such event has happened where Fed has gone for rebalancing its balance sheet, getting the liquidity out of the system, or tapering of the assets, the scenario that is followed pertaining to such action is dollar index has risen due to the liquidity crunch that would be coming forward, and this same could be reflected into the Indian rupee as well. Now, dollar index right now is trading around 98 levels. If the tightening happens, whether it could be paced out or much aggressive tone, that would be dependent on how the inflation numbers will flare. But if that happens, it could be again testing the levels of 100, 102 on the longer parameter scenario. For Indian rupee, I think the RBI has depleted its forex reserves. The numbers have come down a bit, so it could be anticipated that the same has been the action has been taken forward in order to get the Indian rupee stabilize a bit, where it was highly volatile, even testing 77 to 77.50 levels in the future contract. Now, of course, if the dollar index remains strong, Indian rupee will be on the depreciative tone with minor dips even on a shorter term. So every dip should be taken an opportunity to buy, because if you look at the statement of the RBI Governor Das in the MPC meet or in the recent summit, he has clearly indicated that RBI will be more cautious with respect to the rate hike and will be monitoring the inflation numbers and so forth. So giving an indication that rate hike is still not on its card, and the liquidity management will be done through OMOs and such. So this is, I think, in regards with the kind of the budget that was presented, with keeping in mind 6.3 trillion into the borrowing. So in order to reach, or in order to attain that, the long-term yields had to be managed. So the RBI will be keeping in mind to suppress the long-term yields and to manage the yield curve cycle. So going forward, Indian rupee could be on a depreciative tone with where it is already trading at above 76 levels. So 75.90, 75.50 to 74.85 is the maximum downside that one could see. But overall, every dip could be an opportunity to buy into the Indian rupee. By the end of the financial year, we are anticipating rupee to be around, at least testing the levels of 78 to 78.85. So that's all as far the Indian rupee is concerned. Thank you for watching.